Something just shifted in America's banking system. Quietly, late on a Friday, when most people weren't watching. While mainstream media argues about politics, a bigger question is staring at everyday Americans. Do you really control your own money anymore? Because if banks can suddenly limit your cash, flood your transfers, or make you wait days for your own savings, then ownership starts to look a lot like permission. In this video, I'm going to show you what's actually unfolding, why it matters to your paycheck, your savings, and your freedom, and why history tells us this is how major financial tightening begins. Let's slow this down and look at what people are actually talking about. Across social platforms and independent financial channels, a claim is spreading that a new banking framework began rolling out at 5 p.m. on a Friday, the exact moment most Americans stop paying attention to finance. The argument is simple. When changes are controversial, they rarely debut on Monday morning. According to these reports, the rule package focuses on three things: tighter cash access, broader surveillance of transactions, and early scaffolding for digital currency controls. Whether every detail is already active or still being phased in, the direction of travel is clear. Less cash, more monitoring, more friction between you and your money. Why does this matter? Because in a crisis, banks don't actually have your cash sitting in a vault. They operate on fractional reserves, meaning they rely on trust and timing. If too many people withdraw at once, the system strains instantly. Restrictions, in that light, are not about your safety. They're about protecting the system itself, and this is not happening in isolation. Similar policies appeared in the UK and Australia around the same period, suggesting coordination rather than coincidence when multiple countries move in the same direction at the same time. It's usually not random. History backs this up. Greece didn't start with a full freeze. It began with small ATM limits. Cyprus didn't seize deposits overnight. It started with transfer restrictions. Lebanon didn't collapse in a day. It began with quiet withdrawal caps. The pattern is consistent. Denial first, limits second, freezes third. Whether this moment becomes mild or severe depends on how people respond now before rules tighten further. What's unfolding isn't random. It follows how financial systems behave under stress. U.S. banks don't operate like safe deposit boxes. They operate on trust, timing, and leverage. Most of the money you think is sitting in your account is actually circulating through loans, markets, and government securities that work smoothly only as long as people feel calm and predictable. When that confidence starts to wobble, the system reacts the same way every time. It slows access to cash before people can move too fast. That's not about protecting you. It's about protecting structure that depends on your deposits staying put. At the same time, regulators have been steadily widening the definition of what counts as suspicious. Moving money into alternatives like crypto or precious metals is increasingly treated not as personal choice, but as a signal that you're stepping outside the banking system. And when you step outside, the system pushes back. Zoom out, and you see a longer trajectory. For years, policymakers have been preparing the ground for a digital dollar. A central bank digital currency would give authorities visibility over every transaction and far more control than cash ever allowed. Restrictions on physical money make that transition easier because people slowly get used to limits before a fully digital system arrives. This isn't about one rule or one weekend. It's about a shift in power from individuals toward institutions. And once that shift begins, it rarely moves in reverse. This moment in America makes more sense when you zoom out. Over the same week, these US banking restrictions were being discussed. Similar tightening measures appeared in the UK and Australia. Different labels, different wording, but the direction was identical. Less cash, more monitoring, and tighter control over where people can move their money. That kind of timing is rarely accidental. When multiple major economies move in the same direction at once, it usually reflects a coordinated approach rather than three separate coincidences. We've seen this movie before. In Greece in 2015, it didn't begin with a total freeze. It started with small ATM limits that slowly got tighter until people were rationed to 60 euros a day. Only later did full capital controls arrive. In Cyprus in 2013, the crisis didn't explode overnight. First came restrictions, then forced bail-ins where depositors effectively paid for bank failures. In Lebanon and Argentina, the story was the same. Quiet limits, public reassurance, then harsher controls when confidence collapsed. Across all of these cases, the pattern is consistent: denial, restriction, freeze. What matters is not whether the US is identical to those countries today. What matters is that the same sequence is beginning to look familiar. If that pattern holds, the most important window is always at the start, before controls become permanent and normalized. Right now, that window is still open. Here's what all this actually means for everyday Americans. First, it means your relationship with money is changing, whether you like it or not. The era of effortless cash access is slowly giving way to an era of permission, paperwork, and monitoring. That shift doesn't make headlines, but it changes real life. Second, it means you can no longer assume your bank will always be friction-free. Even in stable times, access could be delayed, questioned, or limited. That doesn't mean disaster is inevitable. It means you need to be more intentional. For some people, that will simply mean keeping a small buffer of physical cash for daily needs and emergencies, so you're not completely dependent on digital systems that can pause or flag transactions. For others, it means spreading risk, not keeping everything in one account, one app, or one institution. Redundancy is what makes systems resilient, and the same logic applies to your personal finances. It also means staying informed instead of reactive. Panic moves are rarely smart moves. Prepared moves are. The larger takeaway is simple. The more centralized money becomes, the more important your personal choices become. This isn't about fear. It's about awareness. Because when the rules of money change, the people who adapt early are the ones who keep their options, while everyone else is left asking why they waited. If this trajectory continues, the next steps won't arrive with flashing headlines. They'll arrive quietly, in policy language most people never read. First, cash limits can slowly tighten without new laws. What starts as $500 today can become $300 tomorrow, and then $200 the year after. Each change feels small on its own, but the direction is unmistakable. Second, transaction monitoring is likely to expand rather than shrink. More activities could fall under review, meaning more holds, more questions, and more delays for ordinary people who simply want to move their own money. Third, digital money infrastructure will keep advancing in the background. Even if a central bank digital currency isn't announced tomorrow, the plumbing for it is already being built, and every restriction on cash makes that transition smoother. None of this means America is doomed. It means the rules of money are evolving faster than most people realize. History shows that systems rarely reverse course once they start moving toward greater control. They only pause, rebrand, or normalize. That's why the most important moment isn't after restrictions deepen, it's right now, while choices still exist. The question isn't whether change is coming. The question is whether people will prepare before change fully arrives. The biggest risk here isn't what happens in one weekend, or one rule, or one bank. The real risk is psychological. When limits appear gradually, people adapt, and adaptation slowly turns into acceptance. What feels shocking today can feel normal in a year. That is how major shifts in freedom happen. If you grow used to asking permission for your own money, you stop seeing access as a right and start seeing it as a privilege. That mindset change is far more powerful than any single regulation. Another risk is complacency. Many Americans assume that can't happen here. Yet every country that experienced capital controls once believed the same thing right up until the day it did. There is also a technical risk people overlook. As money becomes more digital and centralized, outages, freezes, or policy changes can affect millions instantly. Cash is slow, but it's resilient. Digital systems are fast, but fragile. None of this means you should panic. Panic hands power to institutions just as much as blind trust does. The smarter position is awareness without fear, caution without paranoia, and preparation without hysteria. Because when financial rules shift, the people who understand the terrain early are the ones who keep control of their future. If you're paying attention, the real question becomes, what should an ordinary American actually do right now? The first step is simple awareness. Understand that access to money is no longer automatic. It is conditional. That alone changes how you plan your life, your business, and your savings. Second, think in layers instead of lines. Don't rely on only one bank, one app, or one payment system. Multiple channels give you flexibility when one channel slows down or shuts you out. Third, keep some liquidity that doesn't depend on technology. Digital systems can pause, glitch, or lock. Physical access cannot. This isn't paranoia, it's basic redundancy. The same way people keep backup power or spare keys. Fourth, build relationships that don't run through algorithms, local businesses, trusted people, and community networks. In moments of friction, real-world connections matter more than apps. Finally, stay informed, not reactive. Watch policy, watch banking rules, and watch how quietly they change. The people who adapt early don't scramble later. None of this guarantees safety, but it does preserve options. And in a tightening system, options are power. Because when access narrows, the person with alternatives still has control. This story can unfold in two very different directions. In the first scenario, restrictions slowly tighten, become routine, and fade into the background of everyday life. People adjust, cash becomes inconvenient, and most transactions move fully digital. Years later, Americans look back and realize control over money shifted quietly. Not through one dramatic event, but through hundreds of small rules they accepted along the way. In the second scenario, enough people push back early, asking questions, demanding transparency, and refusing to normalize limits on their own money. In that case, policymakers are forced to slow down, explain themselves, and reconsider how much control is actually acceptable in a free society. Which path America takes does not depend on banks alone. It depends on how ordinary people respond right now. If people stay distracted, the system will decide for them. If people pay attention, the system has to negotiate. This isn't about predicting collapse. It's about who gets to shape the future of money. Because the fight isn't just about dollars. It's about power, freedom, and who ultimately controls your life. And that choice is still being made. Here's the reality Americans need to sit with. Rules around money don't usually change with sirens or breaking news banners. They change quietly, in technical language, buried in policy, and rolled out when attention is low. By the time most people feel the impact, the structure is already in place. What you choose to do with that knowledge matters more than any single regulation. You can ignore it and hope nothing shifts further, or you can stay alert, question what you're told, and take your financial life more seriously than ever before. This isn't about panic. It's about respect. Respect for your own hard-earned money, your independence, and your right to understand the system you're forced to live inside. Whether this moment fades or becomes a turning point will depend on how many people actually pay attention. So don't just watch this and scroll away. Talk about it, think about it, and stay awake to what's happening to your money. Because whoever controls the flow of money controls the direction of your life. And that conversation is just beginning.